Welcome back to Common Sense Tax Strategies. If you're here for the first time, welcome. If you've been here since my very first video, I'm glad to have you back. So in my first video, you didn't get to see me. Well, you did see a picture of me. And that's because I'm still getting used to the camera. I don't like the camera, but I need to help you guys out, so here I am. It was really awkward, but as I continue to practice, I'm getting used to it. Today, I figured it's time to step in front of the camera and introduce myself properly. So in this channel, we're going to talk about tax strategies, tips, and all things financial, especially focusing on Canadian taxes. My goal is to break things down in a way that makes it easy and makes sense and feels approachable. No complicated jargon, just real practical advice that you can use. Before we dive into today's topic, if you haven't already, please hit that subscribe button so you don't miss out on any new videos. I will be posting content regularly to help you navigate your finances and taxes. All right, let's get into today's topic. We're going to tackle something a lot of Canadians ask about: how to make sure you're not leaving money on the table during tax season. As someone who's worked at the CRA, I've seen people miss out on deductions and credits all the time. Today, I will cover 5 key tax deductions and credits that could save you money. Medical expenses, work from home deductions, moving expenses, tuition credits, and charitable donations. The medical expense tax credit covers a wide range of expenses that you might not realize qualify. You can claim eligible expenses for yourself, your spouse, and dependents. Some commonly overlooked expenses include prescriptions, dental work, for example, fillings, cleanings, orthodontics, travel expenses, mileage and accommodation. If you had to travel more than 40 kilometers for medical care, that's covered. Medical devices like hearing aids and CPAP machines, home care services and attendant care, and as well as therapy sessions. Keep all your medical receipts. You can claim expenses that exceed 3% of your net income, or a set threshold, whichever is lower. You can also claim expenses from any 12 months period ending in the tax year. The work from home deduction is great for those who work remotely. There are 2 methods you can use. The first one is the simplified method, where you claim $2 per day that you work from home, up to a maximum of $500. This method requires minimal documentation. The second method is the detailed method. This is where you claim a portion of your home expenses like rent, utilities, and internet. This is all based on the workspace. You'll need your employer to fill out a T2200 form, and you must keep the receipts. Here's a tip. If you have a dedicated workspace and your expenses are high, the detailed method might get you a larger deduction. Please keep in mind that these home office expenses are primarily for employees and not entrepreneurs. I will cover entrepreneurs' deductions at a later time. You can claim moving expenses if you move for work, to start a business, or for school. If the new location is at least 40 kilometers closer to your job or school, your moving expenses will be eligible. Eligible expenses will include moving services or truck rentals, packing supplies, storage costs for up to 30 days, travel expenses for you and your family, which can include gas, meals, and hotel stays. Also, cost of disconnecting and reconnecting utilities. Another tip, you can only claim these expenses if you have income from the new job or educational program in the year that you move. And please remember, keep receipts for everything.
The tuition tax credit is available to students who've paid fees to eligible post-secondary institutions. The credit helps reduce the taxes you owe based on the amount of tuition paid. Key points to remember: you can claim fees for full-time and part-time programs. You also can transfer up to $5,000 in credits to a parent, grandparent, or spouse if you don't need them all. You also can carry forward unused credits to future years when your income becomes higher. Remember, keep your T-2202 tax form from your educational institution to claim this credit. When you donate to a registered charity, you can claim the charitable donation tax credit. Here's how it works. You get a 15% credit for the first 200 donated. Any amount above 200 gets a credit of 29% or 33% depending on your income level. You can also claim donations made over the past 5 years if you haven't claimed them already. One quick tip: combine multiple years of donations or combine with your spouse's donations to get a larger credit. And always get a receipt with the charity's registration number.
These 5 deductions and credits are just the tip of the iceberg. There are so many other ways you can save during tax time. If you have a question or specific topic that you would want me to cover, go ahead and leave a comment below and I'll make sure to cover it. And if this video was helpful, please hit that like button, subscribe, and share it with anyone who can use some common sense when it comes to taxes. See you next time.